Let's bring in Mark Avalone, president at Potomac Wealth Advisors. And Mark, I got to ask maybe this first. Are you playing offense this morning, or are you still playing defense?
We're staying in the neutral zone. We're not going either way that heavy right now. There's just too much uncertainty, and I think investors that are changing the fear equation from the greed posture that we had seen late last year and even in January. I think those people who are playing ping pong with those two diverse emotions are the ones that are going to lose out here. Look, we don't know the duration and severity of this. We don't know how widespread it is. So to wake up every day and put more money on the table and say it's going to be black today and red tomorrow, that's not a solid investment strategy. Let's look at the underlying economy, understand that this virus will run its course, and it is going to impact in the short run. So if you're a long-term investor, think longer term and stay out of the short-term hiatus that we're going through.
That sounds a lot like what Warren Buffett, the billionaire investor, was telling us on CNBC just yesterday in that big interview with Becky Quick. I also want to bring your attention right now to something that President Donald Trump said. He tweeted yesterday at 4:42 p.m., "The coronavirus is very much under control in the USA. We are in contact with everyone in all relevant countries. The CDC and World Health have been working hard and very smart. Stock market starting to look very good to me." And that last line is what I want to focus on right now. We know the president is a stock market watcher. Is the stock market right now, given the pullback we saw yesterday, looking good to you?
Well, with all due respect to the president, I don't think short-term market calls should come out of 1600 Pennsylvania Avenue. It's a lot more complex than that. The stock market is reflecting a total breakdown in the norms of global commerce. When Austria says no more trains in Italy and the streets are empty in China and supply chains are disrupted, that's way too much uncertainty to make investment decisions on. Even domestically, if you start thinking, well, I'll work with some small cap companies, I have business owners who own small companies whose businesses are being disrupted by this. Until we know how pervasive it is, you don't dive in with both feet. And in terms of which sectors, I don't think it should be surprising that travel is getting crushed right now. I know the cruise industry has come back every time after there's been a SARS or another global illness and an outbreak, but we're in a social media world, and to see these pictures every day of cruise lines stranded off the coast, passengers turned into patients sitting there drying their laundry on deck, that's going to be a visual that companies like Carnival are going to have to wrestle with for a long time. And even if they get traffic back, they're going to have to do it with deep discounting. I think there's a structural change now in the cruise industry, at least for several years.
What exactly is the thing that maybe worries you the most in the course of the next couple of months here as we get out of this seasonal flu season here in the United States and other places around the world, and this thought that maybe the coronavirus starts to abate by maybe March, April, May this time around?
Well, that's the expectation, is it'll behave like the flu and calm down and we can resume. But I think starting this engine back up is going to take a long time. I think the drop to global GDP in Q1 and early Q2 is going to be deeper than forecasted. I don't think the numbers coming out of China have been very reliable.
Sure.
So if we have global GDP suppressed greater than we think, the engine is going to take a long time to ramp back up. It's going to suppress numbers for the year. These very low interest rates reflect that.
Gotcha.
Okay, and the worries in the oil market reflect that. So I think it's going to be deeper for longer on the global impact. We will recover, but it's not going to turn on a dime.
All right. Mark Avalone, Potomac Wealth Advisors, thank you very much for those market thoughts.
Good to be here.